Hey all, welcome to ShareTreck where science meets investments, and I'm your host Raj. Friends, today I'm going to talk about the tension that Trump has with the Federal Reserve. It isn't new, but now I think it's starting to hit a boiling point. He's not just criticizing Fed Chair Jerome Powell, he's actively considering announcing Powell's replacement before the end of Powell's term in 2026. If that happens, I think we could be looking at a shadow Fed governor, a figure shaping rate expectations from outside the institution. Not to mention, it would have an impact on the DXY, which is the dollar index, and the dollar index has already dropped 12% approximately since January 2025. In this video, I'll break down what this means for the market volatility and Fed independence, Trump's likely picks, and how the markets are reacting to that. And I'm also going to talk about what retail investors should watch out for in the coming months. Let's get right in. Welcome back, friends. Let's start with Trump's long-standing frustration with Jerome Powell. Throughout his presidency, Trump has pushed for lower interest rates, claiming that the Fed was holding back the US economy. In recent months, he has renewed these attacks, calling Powell terrible and demanding immediate rate cuts to boost growth and reduce borrowing costs. He has given Powell a lot of humiliating nicknames. He has also made it clear if he had his way, he would not keep Powell. Instead, he plans to appoint someone who will support a looser monetary stance. When I say looser monetary stance, I'm talking about LOOSER monetary stance and not LOSER. Okay. So that said, Trump has openly discussed naming Powell's successor well below end of Powell's term in May 2026. He's reportedly considering names like Fed Governor Kevin Warsh and former NEC Director Kevin Hassett, both known for dovish pro-growth leanings. If one of them is publicly named soon, they could begin influencing the market by giving speeches, sharing policy views, and effectively acting as a shadow Fed governor. Remember, markets are always forward-looking, and that enables this kind of a behavior. That sets up a scenario where two people, the current Fed chair and the incoming one, are both sending market signals. What would be the result? Well, I think it's going to be confusion, volatility, and reduced confidence, inability of the Fed to confidently influence the market in the direction that it seeks to. The Fed has long operated with a reputation for independence, but when a political figure like Trump announces a future chair who aligns with his policies, it raises alarms. The fear is that monetary policy becomes a campaign tool, not a stabilizing force. Legal scholars note that the president can't remove a Fed chair without cause, and the Supreme Court has recently affirmed that. But influence doesn't always need to be formal. Just the perception that future decisions are being politically steered can shake investor confidence globally. Because remember, the dollar and the US Treasury is bought globally. And here's where things get serious. Trump is already proposing tariffs on key imports like pharmaceuticals and copper. Imagine raw materials being tariffed heavily, like 50%. We are talking about steel, aluminum, and copper. Now, that's a big deal. It's going to increase the inflation. It's going to increase the cost of manufacturing. And combine that with aggressive rate cuts, and you get a potential inflation cocktail. Lower rates boost borrowing and spending. Tariffs raise prices. Together, they can push inflation up quickly. And that's what the Fed is really worried about. And that's why they're holding the interest rate and not offering too many cuts too soon. And that's why the markets are so jittery. What looks like a short-term boost for equities could easily become a long-term problem for purchasing power and bond yields. And now let us talk about how it's going to impact us, the retail investor, as well as Citizen Joe. First of all, we'll see volatility spikes because competing voices from Powell and the shadow Fed will confuse the markets. The next, we'll see a short-term stock rally because equities might rise on rate cut hopes, but it could be a sugar high. And then there are the long-term risk, which is inflation, weaker dollar, and rising yields could hurt savers and borrowers. And if the yields start rising, then the government is going to find it difficult to borrow. And therefore, the interest cost of the government is going to go up. And then ultimately, there will be a breakdown of trust in the Fed. If confidence in the Fed drops, the US market's global status could weaken. And let me ask you this. Do you think we need independent Fed? Do you think the Fed still has credibility? Please put your answers in the comment section because I want to get a feel of what the community is thinking in general. From my perspective as a foreign investor into US, I am thinking that look at genomics. That's where we invest most of our dollars in, and that's the focus of the channel. In genomics, we are depending on FDA, and the FDA governance itself has been diluted, and the credibility of the FDA is on the line with a lot of controversial policies and controversial happenings at this point of time. Similarly, if we wreck the Fed as well, then I think the exceptionalism of the United States might probably start tapering down. Things like these don't happen overnight. They take a little bit of time. But the DXY is already showing a decline of approximately 12% since January when Trump took office. And that indicates a waning confidence in the global community in the United States. And I think a shadow Fed is just going to vitiate the whole thing. I would like to hear from you guys. And if you like videos like this, please press a like out there and it gives me the message. And also, if you haven't subscribed, please subscribe and help grow the channel. Thanks for watching this video. And I think with that, I would like to bring this video to an end, and I'll catch up with you again in the next one. Bye for now.